Naked Nation, what is going on? We are going to have a video, pretty long video, going over the entire setup of my charts, how to set up charts, how to get into crypto trading if you're interested, and what you need to be successful in order to be a successful trader. It's going to be a lot like my YouTubes that are broken down into small ones. There's going to be new information here, probably a lot of old information for the people that have been at Naked Nation for a while. And yeah, we're just going to get into it. And as well, if you guys haven't seen, there is a tournament right now on BitUnix using my referral code, either Naked Nation or VRFX. Last time the prize pool was $50,000, but now there's three different tiers of tournaments. 60% of the prize pool will go to this tournament, 30% of the prize pool will go to the profit, and 10% will go to the new user volume leaderboard. Which you haven't signed up, this probably will be the easiest tournament to take down. To be fair, the prize pool won't be that big, but it's pretty much free money if you're already a trader. Last time we hit about 800 million in volume last month, I think, which could equate to about $150,000 prize pool. If you haven't signed up with my referral code, you do get VIP3, which allows you to get about the same, a little bit less than what it costs to trade on Binance. The more you trade, the more you get rewarded on BitUnix, whether it's through future bonuses or other such things. So if you're interested and you want to, feel free to sign up. KYC-Friendly, trade from anywhere around the world. We've been using it at Naked Nation for over a year. It's been pretty decent, outside of some one or two small hiccups, but can't complain fundamentally overall. But getting into the charts, getting into everything, obviously, what are we looking at right now? This is called Trading View. Trading View is a tool that allows you to chart, add indicators, make it look dirty like my chart is right now, as clean as you want, as dirty as you want. If you haven't signed up for Trading View, personally, if you're, on BitUnix, they actually do have Trading View integrated into their system, but doesn't matter. You should own it. It's like $15 a month, and if you're smart about it, you can get it on discounts around like Black Friday or like Cyber Mondays or whatever any fucking holiday. There's usually a discount. If you use my referral code, which is in my link tree down below, you can get $15 off on your first month. Which fundamentally, what you want to do is you buy it for 1 month, cancel it. TradingView will come back to you and be like, hey, why not get a full year subscription for like 50% off? And you're like, yeah, cool, I should do that. That's how you beat the system. So a little bit of alpha there for you. I mean, that should still work. That's how it used to work for a long time. Maybe now they've fixed it, but I'm pretty sure that's how it works still. They just want you to sign up. They don't make anything special. I'm also going to go over this video things that are important, things that aren't important, heat maps, not heat maps. But that's neither here nor there. So right now we're going to start with a new layout. I think I have enough layouts left. I think I can make a fresh layout. And we're going to start a chart from scratch. Do I have enough layouts left? Is it being slow? Something's happening. Maybe something was laggy as fuck. Okay. That's fine. It's my internet. Probably not TradingView. TradingView is much cleaner. I've been having weird internet issues recently. YouTube tutorial. But hopefully we don't have, it doesn't matter if we have internet issues on this. It's a recording, so it fundamentally isn't that bad. But I'm going to go over just the basics of all my YouTube videos that I have. I highly recommend watching every single one of my YouTube videos. Take a weekend, take a week, whatever amount of time before you even start trading. I guarantee you the amount of people that are like, oh man, I wish I watched this video on blank. I would have not lost money on blank. It's really, I have a VPN on one. This is why this is being stupid. Stupidly slow. So it's really, really important for you to watch all my videos, guys. I put out these videos for you guys for free. This is pretty much a free course that you would probably pay thousands of dollars for anywhere else. I'm giving it all away for free. I don't care to monetize it, though I maybe will in the future. Can this, yeah, it was my VPN for sure. Okay. Okay, so when you get a fresh chart, right, Kind of looks like this. What should we start off on? Let's do ETH because ETH's kind of the popular one these days, yeah? So, charts, fundamentally, breaking it down, these are candles, these are time frames. Each candle represents a time frame of what you clicked. So each of this is an entire daily candle action. This breaks it down into 3-hour candles. This breaks it into hourly candles, 27-minute candles, 9-minute candles, 3-minute candles, and so forth. Candles are candles don't looking at 9 minutes doesn't mean it's going to take 9 minutes to complete. Looking at 1 hour doesn't mean what's going to happen in the next hour. The best base case I can give you guys is take whatever time frame you're looking at and multiply it by 9. If you multiply it by 9, that's about how long it will take to play out. And I'll explain play out as we continue, but just keep that in your brain. Because playing out we have to find an indicator, which I'm going to add soon, on how to calculate, in a sense, time. And remember, before I continue, everything you're hearing from me right now, I've developed myself, the theory myself. I haven't read a book. I haven't read a fucking course. I never bought a course. I never did anything. My entire trading setup reality is me putting 40,000 hours of massively fucking high-level autism to figure out how to beat the charts, in a sense, beat the charts, or at least understand the charts, read the charts. So, going back to what I was saying, times 9 will take you, like if you look at the 9 minute, it's probably going to take 81 minutes for it to play out. If you're looking at the daily and you have a daily idea, it might take about 9 days, about a week and a half for it to play out. Now, as you start going higher and higher, it's a little bit more wishy-washy. A weekly could take 9 weeks to play out. What's 9 weeks? Yeah, about 2-ish months. That's about right, too, right? If we kind of look at this move right here that kind of started it, what's it been? It's been like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Like I said, it's not perfect. It's just for the newbies. Once you get into the flow, you won't even think about it. But if you're really fresh and you need a way to gauge reality, because this is a different reality you're putting yourself into, probably the best way I can explain it to you, okay? Now, what you want to do, or what I do, is I start on the daily chart. And especially with a coin with a lot of history, and remember, a coin with not a lot of history, aka a coin 1 year or less, TA is going to get a little bit harder. The less time that exists on a coin, the harder it is to gather a good grasp on what it actually wants to do, or what it will do, or how to read it. The more time on a chart, the better. Number 2, always use Binance feeds. I don't care what exchange you trade on. I trade on BEGGINER, I trade on XC, I trade on a lot of exchanges. But you know what's the truth here? Whatever coin I look at, it's gonna be ETH, and it's gonna be on Binance. And ideally, you do both Binance ETH USD or USDT, and then you also do perpetuals. If you type in anything into TradingView blah 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 .p, you're going to get the perpetual, which is the futures contract. And we know futures has the most amount of volume out of everything out there, which is very important to look at what has the most amount of volume. That's what I'm going to say. You might be like, bare naked, but my price on my exchange is a little different. It's all relative. It's all relative. ETH might be 42.98 on Binance. It might be 4,300 or 42.97 on the other exchange, but it's all relative. It's going to move relative. It doesn't matter, fundamentally, at least in my eyes. Anyways, so we'll turn on the perpetual chart here, and you will notice perpetuals sometimes have less data than a spot. As always, start off on spot, and then you can always transfer your meme lines, whatever you want, onto whatever else you want, right? And ideally, especially for Ethereum and Bitcoin, find the exchange, and sometimes it might not be Binance, 90% of the time it's Binance, but you want to find the exchange that has the most amount of data. If your exchange just listed a coin and you're charting it, you're fucking yourself. Find the exchange that has the longest data, the most data, and the highest volume. That's your goal. Okay. Number two, this little when you open up a chart on TradingView, they include like this little volume indicator there at the bottom. Delete it. Fucking pointless. Won't teach you anything. Won't do anything. Anyways, let's continue. Back to actually charting. So now we're gonna zoom out and we're gonna try to find lines of best fit. Where does the chart seemingly hit or bounce an area a high amount of time? And you just start drawing, bro. This will start at least to set up levels where you know are important, where you know if it hits this level, it's hit this level many times in history, and it can line up to be a potential support and or resistance spot. It's a support if you're falling below it, and it's resistance if you're approaching it from the bottom, right? Okay. Now, what a fundamental surprise for the most part. That, wow, where did we top out on Ethereum this year? That's not too crazy, right? And what this will do, and what you really want to do, is there's always, for every coin, doesn't matter if it's Ethereum, doesn't matter whatever the fuck it is, there's always a coin that's going to have a flipping point, almost a pivot point. You will notice that, like, hey, and this is, you have to figure it out yourself. For this one, I know it for Ethereum, it's about 28.50. But you'll notice for a coin that every time it goes above a certain price, it always goes higher, and every time it goes below a certain price, it always goes lower. Example, 28.50, 28.75 Ethereum. Every time we've gone above it, we've gone higher. Every time we go below it, we go lower. Every time we go above it, we go higher. Every time we go below it, we go lower. On a very base case, like from a very zoomed out point, right? When we were here on Ethereum at 1600 or whatever, 1500, where was that big breakout area? 28.7. Where did we go? 4K. Where did it usually go? 4K. Where did it find support? 28.50. Where did it go back? 4K. Where did it break? 28.75. Where did it go? 2.4. Where did it break and go higher again? 2.8. Where did it go? Da 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 da. Where did it go? 2.8. And so forth, right? These can give you just these little fucking areas, and you just have to find it. There's always an area where it's finding a support from the top and a resistance from the bottom, and you know that if it breaks above it, you can just be like, okay, simple. 90% of the time, it's gone to 4K. It's probably going to 4K, right? Pretty simple, right? Same thing. Every time we've broken above 4K, where have we gone? A minimum of 4,500. Plus or minus. Yes, we've gone to 5K or close to 5K. But for sure, we've gone to 4,500, right? So you know it when, now you don't know, but like now, if we're kind of looking at it from the bearish perspective, if we start approaching 28.75 and we break 28.75, well, it's probably going to at least retest 24 to maybe even 1,500, right? Theoretically, at least, right? So these little areas will at least set you up. And remember, when you draw these trend lines, it applies it to the other areas, right? Like the 3 hour, the blah, blah, blah. And this is when you can kind of zoom in and be like, okay, is there an area when you start zooming in and start scaling back and start zooming in, you can be like, okay, there's definitely, bigger areas than that. Okay, clearly 31.78, right? Let's zoom out. 31.78, is there a lot of support resistance here? Yes, I see it. If we break 31.78, we've gone 21.75, 21.75, 31.80, okay, 31.80. You can, if you want, you can start adding in like these little dashed areas where maybe it's like, and by dash I mean you go to the tool right here, you can add a dash line. Oops, I clicked on the wrong one. This should be this one. And be like, okay, maybe this is a weak resistance. I'll keep it a dashed line because I know the thick line is the strong one. The dashed line is like, maybe 50-50 wishy-washy, right? That's what you want to start doing. Start developing these areas. Why do I always happen to my trend line's always literally almost 100% accurate on stream? It's not a coincidence, broskies. It's just the market. The market is run by bots. The market is mostly bots. It's mostly fucking wash trading, which, by the way, the United States and nobody's talking about it, and this is a little bit of alpha. In the United States, in that latest stablecoin act, they're getting rid of wash trading eventually. I'm telling you, when they get rid of wash trading in crypto, I'm really worried about what's going to happen to it because that's like literally its only purpose at this current point. But anyways, that's like side fundamental alpha. Anyways, um, it's all bots and all algorithms, and they're all using like certain indicators, EMAs, key areas, and so forth, right? The number one bullshit thing to not do is do not look at patterns like falling wedges. This is a falling wedge. Falling wedges should be bullish. Or a falling wedge, would be like, oh my god, it means it's gonna break out. Bullshit. It's all bullshit. Do not fall for the normie bullshit. All that crypto is a channel. It's a channel up and it's a channel down. Okay? What you want to do is you take 2 points and you connect them and you draw it as if you don't know the future. Imagine this, we don't know the future, we just connect it. It doesn't matter. Don't try to do like, oh, but I have to connect the dots. Don't connect no fucking dots. The moment there's a fucking support area and you can fucking put 2 points together, that's all you need to fucking do. Try to make it look clean and pretty, blah blah blah. There you go. Wow, what a surprise. We relatively, and remember, trend lines aren't like the fucking, the Bible or something, It's, you can crack below it, you can go a little bit below it. It's a guideline. Trend lines are guidelines. That's why I call them meme lines, because it's kind of a joke, but it's also a good guideline. It's, just because you break below it doesn't mean you're going to capitulate, because you can always wick back above it. For fake breakouts is why they're called fake breakouts and fake breakdowns. Another thing that's important when looking at just lines or in general is waiting for candle closes, right? Just because you go below it doesn't mean it's actually going below it, right? It's just like, yeah, it broke the trend line, but it's like, did it break it with volume? Did it? And that's like the biggest thing, this little volume chart on the side, I'll explain it later, but it's on my YouTube as well. If we were breaking this right now and the volume was the way it was, yeah, you're not breaking it. It looks like it's breaking, but it's not. It's trapping people who are over perfect on trading, and that's number 2 thing that you got to remember. Don't be perfect. You can't be perfect in an imperfect market. That's kind of my theology, ideology when it comes to crypto trading or trading in general. You can't try to be perfect in an imperfect market, because that will lead to you being imperfect. Actually, being imperfect will lead you to being perfect in an imperfect market, if that makes any fundamental sense. That's the way at least I fundamentally see it, right? So it's really important to just to see it that way. Okay? Now when you're drawing channels, there's always a top channel, a bottom channel, and fundamentally there's always going to be some kind of middle fucking channel. And you'll kind of notice that if you break the middle channel, you usually go to the bottom channel. If you break the middle channel, you go to the top channel, and so forth and so forth. It's not a guarantee, it's not 100%, but it's also a good guideline in a sense, right? Just kind of putting it out there, okay? So now that you've kind of looked into charts and like just the basics of drawing some lines and this alone won't save you, right? Just drawing, there's resistance or support here at, 42.50, which fundamentally there has been, to be fair, and it's been a very powerful 42.50 that's held us for the last little while. My general theory is, whether it's EMAs or not, and I'll explain that as I go, the longer you hang out at an area, like at a line, the more likely you're going to break below it. If it's the other way around, where you're kind of like trying to break above it, the more you hang around a line, the more likely you're going to break above it. But I'll explain that in a little bit. It'll make more sense when I throw on EMAs. But just so I don't, because my head's a bit of a scatterbrain sometimes, so you just have to kind of follow along with me. But I think, let me just make sure, I don't think I have anything else to say about this. Oh yes, one last thing. When you do finally set up all these lines on your charts, remember, never make your target area exactly 42.72. You'll notice, just in general, you could just draw a little bit of a circle, like a little bit half above the, I don't have any science or math to it, but you draw a little circle, in a sense, right? If it finds support in the circle, it's probably, it's going to be support and it's going to, hold the area. If it breaks below the circle, then maybe something is wrong and it's about to go lower. You'll notice, like, just having a trend line and oh, it's to that trend, it hit the trend line, it's gonna break above it. Like I said, don't be perfect. It's a zone. It's always a zone. It's always a zone with these trend lines. Sometimes it's perfect, sometimes it's not. But it's always good to know that you have a zone. And if it breaks the zone, then yeah, it's probably going fucking lower, right? It's probably going to, if it extends past the area of like, a little bit of bullshit, a little bit of that, then yeah, it's probably going to break the area. We break 4179, 4180, yeah, we're probably going back to 4,000, right? Type shit. So, anyways, that's trend lines in a nutshell. Now, let's bring in some indicators, shall we? Which ones do I want to bring in? You can in the Discord. Let me just kind of preface this now that I have Discord. Um, Discord, I want to quickly explain. Join our Discord, by the way. It's free. Number one, everybody's a VIP at Naked Nation. Inside, and let me just kind of quickly break it down. Here is the shout box where I tell you whether I'm live streaming. If I have crypto ideas, like last time, I'm like, the market was dropping, and I'm like, the 9 minutes getting oversold. The volume is pretty garbage. I don't think this is the real drop. Max we go is 42.80, and funny enough, that's exactly where we went last night. We went to 42.83, and then since then it's just been up, or it's not been up, but been sideways up, whatever bullshit you want to call this, right? So you'll get that inside my Discord, number one. Number two, my chart FAQ, any of my settings bullshit, you'll find it in here. If you need help verifying, just put yourself in help. But verify should be simple. You just click the fucking button. It shouldn't be that hard. But sometimes I guess tech breaks, so maybe not. So if I only post a Discord update, you'll find it in here. If I post a Twitter update, you'll find it in here, or on my Twitter, or X as they call it these days. You want to ask me a question? Don't ask me if it's going up or fucking down. I'm not going to answer you. Reasonable questions, I may answer you, I may not answer you, but your best bet is in there. You want the shitcoins that I'm interested in the upcoming bull run? They're in here. We posted this on July 2nd. We were waiting a while to post this. Unironically posted it near the bottom. Shout out to me. You can get all my links here for my Twitter, TikTok, whatever, all that bullshit. You'll find it there. Trading and memes. This is where everybody hangs out. Don't believe what everybody says in here. There's a decent amount of trolls, a decent amount of retards, me included. It's more for fun, more for chilling. Sometimes you'll find some good ideas. Sometimes you'll find some stupid posts. Like I said, I keep Naked Nation pretty chill. If you want real analysis where people post their analysis, check it out here. This is a lot better. And I implore you to post here as much as you can. Even if nobody reads your shit, just go here, post your shit. The only way you're going to get better is by publicly putting your ideas out there. I guarantee it. You'll level up way faster than like chilling at home and going, woo, woo, woo. Right? Stonks for stonks. Learn for free resources. I got a bunch of shit that I've collected over the years in here. So I highly recommend this area. Anytime I post something, I gotta not let people post threads, but like I said, I'm not. It's a free Discord. I don't really have any mods or anything that's serious. News, cat gifs, sports betting. We're pretty big sports bettors in here, so check it out. And I think that's about it. That's generally the basis of Naked Nation. So make sure to join the Discord, because if you don't, where the fuck you at? Anyways, let's go add some indicators to this. And I think one of the best indicators in the game, and there's many indicators, but you want to add EMAs. In Discord, you will find something, and I think it's under Chart FAQ, because you have to add it to your Trading View, which is, by the way, Trading View affiliate right there. This one, Naked EMAs. You can have other ones like this one, EMA, 100 EMA, but whatever. If you add this one, it's a little bit easier. Add it to your charts. I don't know what the fuck's going on. Why is it being retarded right now? Something's being retarded. My internet being retarded. Something. Why are the EMAs being added? Okay, there we go. Okay, wow. I don't know what's wrong with my internet. Anyways, so there's these EMAs, and EMAs are exponential moving averages. Why do I use EMA over SMA or MA? Because I know pretty much every bot in the world uses fucking EMAs, and you'll be surprised how much more accurate EMAs are over any of the other ones, but I'm sure the other ones are accurate. It's just how you develop your trading strategy to it. Inside here, you'll have 9, 21. I don't really use the 21. If you want, you can. I don't really care about it. The 30, I like. The 50, the 100, the 200. The shapes, technically, they're like these fractal things. You could use it. Technically, when it posts red, it goes down. And technically, when it posts green, it goes up. I don't really use it that often, but it's actually kind of interesting. So if you're interested, you can use the shapes. Feel free to develop a strategy or not develop a strategy off of it. I don't care. I'm just going to quickly just adjust these colors just so they're a little bit more my type on how I usually do it. You can have colors the way you want it, but fundamentally, you probably want to copy my colors because then I'll be using the same colors as your colors, and everybody's happy that way. And I think these are the best colors that I've set up for it as well. Casual reminder. I don't think it gets any better than these colors. I usually like to have like maybe dots for the 100, and the 200 can be solid. Okay, so the 100, 200, all these EMAs, so many EMAs. What do they mean? Long story short is what people are willing to pay for it over time at a certain time frame, which is a little bit deep if you think about it. Obviously, the daily is going to have a different 100 EMA. The average money gone in on ETH is around 3,200, and right now we're at the 30 EMA, which is at 4,280, which is a very bullish EMA to still be above on the daily. But once you start cracking the 30 EMA, the 30 cracking the 30 is like all right, but if you crack the 30, the next boss is 50. You break the 50 EMA, I'll see you at the 100 EMA. That's for sure. The 30 and the 50 are kind of like best friends. Sometimes the 30 will break, but the 50 will have its back, and it'll send it back up. Example of this: 2021 Bitcoin. Let me just go to the weekly because I just want to kind of explain you. I mean, even weekly right now at BTC, it makes sense, right? We break the 30, but who has its back up? The 50. As long as you hold the 50, especially on like higher time frames like the weekly, the daily, blah blah blah, you're fine. The market is still bullish, right? You start breaking the 100 on the weekly, good fucking luck. You're probably about to go into a bear market like here, 2022 April, and that's for Bitcoin. And you can kind of see in 2020, when everybody was bearish in 2021, what was the reality? Actually, it wasn't that bearish. So it's important to respect EMAs and understand EMAs, and you can get that more in my other videos about EMAs. I'm not going to go too hard into it. Otherwise, this is going to become like a fucking 3-hour video. It's already a 30-minute video. But I think this video will be about an hour. So we're almost at least through the basics. So yeah, these EMAs can help you understand, is it actually bullish? Is it actually bearish? And then you can break it down to lower time frames. It'd be like when it starts going below, like the 200 EMA on the 3-hour, you'll start to notice patterns, right? For a long time, Bitcoin was above, this is from April, multi-month trends, right? If you break a multi-month trend, that's usually, things can get nasty, but you can kind of see it's been just holding that 200, 200, 200. There's been some few times where it fell below it, but when it did fall below it recently on August 18th, it's just been like retest 200 EMA, go back down, retest 200 EMA, go back down. So these EMAs are a lot more important than you think because they tell the market and the market makers and the bots to be like, hey, are we priced well or are we not priced well, right? And you might be wondering why you're using the 3-hour bear naked. And going back to time frames, I use the multiples of 3. 369 is what Nikola Tesla said were the answers to the universe. And I said, you know what, fuck it, that guy was pretty smart. I'm not that smart. I'm gonna let him figure it out for me. So I've been pretty much using 3-minute, 9-minute, 27-minute, 81-minute, and I like to use multiples of 3. I think that works better. I don't care what time frames you use. You can use whatever the fuck you want. But whatever you do, use multiples of 3. If you use the 1 hour, why are you using the 4 hour? That's my opinion. If you're using the 1 hour, use the 3 hour. If you use the 3 hour, use the 9 hour, and so forth, right? And so forth, and so forth. Right? It kind of makes sense. The daily breaks into 24 divided by 3, breaks, there's something to the 3, right? In my opinion. The daily, the 3-day, and so forth, right? So, let me have another drink. So, when you're looking at these EMAs, it's important to know, like, the biggest one, the most important one, you got the 30, you got the 50. The 1 and the 200 EMA are, especially on higher time frames, are one of the most critical and crucial ones. You can delete the 9s, you can delete all this shit, and just keep the 300, 200. Because you'll notice when certain things happen, such as the 100, which is the baby blue, crosses below the 200 EMA, which is the red, things get a little bit bearish. And what happened here? Things got a little bit bearish. Usually you'll notice when you do have that crack, you'll retest the 200 EMA and then smack it back down. Because once you start getting bearish, like this type of thing, now things can get, now that you can cycle into a bearish wave, right? When it was bullish, look what happened. It stayed above it, 100 B above it. It even had a little kiss right there, went for one last pump, and then it got murdered, right? So you can go back in time and you can just kind of look and how the 100 EMA and the 200 EMA react to each other. Once again, crack below it right there. When it cracked right there, it retested 200. It did a little sideways bullshit, but eventually it ended up lower, right? And look how many times. And a lot of times when you do, like, you know, you're bearish. Oh, it's so bearish. You'll retest the 200 EMA. If you're not ready, send it back down. Retest the 200 EMA. Not ready, send it back down, right? But what happened here? Retested 200 EMA. Okay. But what did it do? It held the 100 EMA, and then it started to try to do a little breakout. Still failed, unfortunately, and kept breaking down. But once you can finally see that crossover right there, that's your ticket to be like, hey, shit might get bullish, and just absolutely fucking yeet. And you can see every time it touch 100 EMA, boom, bounce, bullish. 100 EMA, boom, bounce, bullish. And this is what I said about it. What I said earlier about hanging out on a trend line or hanging out on an EMA. EMAs, you generally want to like V-bottom. The longer you hang out on an EMA, the higher chance you're probably gonna go down, right? The more when it's bullish, they want to V-bottom off of these EMAs. They want to boom, boom. If it's bearish, they want to boom, boom, right? If they start kind of hanging out around an area, right, there's a chance that it's trying to build support or whatever, and they want to send it up or down, whichever way they're building support, right? So that's another thing to look at. Next is what I said earlier on, and one of the most important indicators, in my opinion, is RSI in tandem with stochastic RSI. And I think these two indicators alone are everything. Now remember, if you're trying to copy me and copy my trading strategy, I want to remind you, I've put 40,000 hours of chart watching, losing into figuring it out. Copying me exactly may not work out for you immediately. It's not as easy as it seems, and so forth. But just letting you as a reminder. Now, RSI is pretty simple, and I highly, highly recommend to watch my RSI video. Naked RSI. I developed this RSI strategy myself. Nobody else in the world does it as far as I know. I break RSI into 4 key levels, technically more, but on its base case, 4 key levels between 36, 46, 56, 65, 66. It doesn't matter. I use 65, but 66 is about the same. The numbers don't fundamentally matter. You know, the accuracy of these numbers don't really matter as long as you have the range. These RSI levels give you health levels. This will tell you, is it more bullish? Is it more bearish? If you're above 56 RSI, you're actually more bullish. If you're below 56 RSI, well, there's 2 ranges. The between 56 and 46 is the coin flip zone. If you deny off 65 RSI, that can be a bull trap RSI. And then if you look at it in tandem with the 200 EMA, what a surprise, right? Right there, bull trap RSI, but also at the same time, 36 RSI is a bear trap RSI, right? Because if you look at regular RSI books, they tell you above 50 bullish, below 50 bearish. Bullshit. What, 51 is bullish and 49 is bearish? Well, how does that even make fucking sense? Zero fucking sense. So I had to develop a range, a health level for the RSI. The RSI being oversold or overbought has it doesn't matter on the market. The RSI can remain overbought for a while, and it can remain oversold for a while, fundamentally. In bullish markets, it usually remains overbought for a while. In bearish markets, it remains oversold in a while. But what you want to look with the RSI is, like, obviously, is there any trend breaks, right? Especially on 3 hours. If I notice like a 3 hour trend break, usually goes down lower, assuming you're not in a weird sideways position of the market that we are right now. I mean, we did go lower, but not significantly lower, right? But like, you want to find trends, and the longer RSI trend you can, same thing as I do, you try to find a line of best fit, do your best. It doesn't have to be perfect. It doesn't have to line up perfect, but if you can find a line of best fit, that's better. This RSI trend is definitely more important than that little one that I drew here. the longer the RSI trend, especially on like a 3 hour or a daily, the higher chance that if you break it, oh hell yeah, you're going lower. Or if you go break it above it, oh hell yeah, you're going higher, right? So, like the example, like right here, like, oh, okay, RSI trend broke like pretty much right about here. We hadn't even broken above the 200 EMA yet, and then we fucking yeeted it to a new all-time high, right? RSI trends more important than anything. Now, stochastic RSI, in my opinion, is a time indicator. This will give you an idea on how to time these areas. When it's overbought and heavily overbought, there's a really good chance that you're kind of probably going to pull back. And if you looked at this, what happened? We were approaching the 100 EMA, right? We had a triple bought, overbought stochastic RSI, which then you have to even further break down to the hourly, because it's like, yeah, how do you know at, deleted it, hopefully it doesn't take too long to load, right? How do you know at this point, oh, what if it's overbought here, bare naked, right? What do? If we break this down, let's just kind of get down to let's do this and do this on the hourly there. Now we're gonna go to the hourly. What did the hourly look like around there, right? How was it looking? It really wasn't that bearish, to be fair, because it went from overbought to oversold, and there is a bullish divergence from that. What you want to look with these charts, just because the 3 hours overbought, or the 1 hour, or the 27, or the 5 minute, or the 9 minute, or whatever. And I have a bunch of fucking videos on this. I'm not gonna go too hard into this because once again, I've made like 8 videos on this because it takes a lot of brain understand, in a sense, like extrapolation of time and charts into this. Okay. But just because the 3 hour is overbought doesn't mean it does mean that you might go down a little, but it doesn't mean it's the one that's going to break down, right? It's not the one that's going to break down just yet, potentially, right? It could be what's happening on the market. Is it bullish? Is it bearish? Is it New York Stock Exchange open? Is it, how's the volume? Blah blah blah, right? And one of the best things to look at is like, okay, the last time it was oversold-ish, or because anything in this region is technically oversold, right? Number one, it went from oversold to overbought. Okay, denied the 100 EMA. Okay, what happened next? Okay, we're gonna probably pull back. Okay, we did pull back, but we went all the way back to oversold, but the price was here, and now the price is here. So if you go back to the 3 hour, you'll be like, oh, maybe it's not ready to go down just yet. Maybe we're gonna get in stochastic RSI extension. Wow. Isn't that crazy how that guys works? I swear to God, if you guys ever ask me on this on stream again, I'm gonna lose my shit. That's what you want to do. That's how you want to break it down. Now, just because it extends and the fact that it stayed under 56 RSI, that's still telling you, hey, it's not that bullish. We're not breaking above that bullish range, right? That's important. Now we go to where we are right now. What's happening right now? Kind of the same thing, where it's kind of looking more bullish. Yeah, we went to 200 EMA overbought on the 3 hour. We're pulling back, but we're not really going lower right now. There's still a little bit of room left theoretically to go lower, but even if we do go lower, let's say we do get oversold, and based on this pattern of slowness of going down, well, actually, you're still gonna develop a bullish divergence here, as long as you don't pretty much break below like 109.3. Even as long as it's a double bottom, doesn't actually have to be a bullish divergence. It could be a double bottom. If this gets oversold on the 3 hour by the time and then we're not any lower, well, what do you think it's gonna do? It's gonna go up. If you can't go down, you go up. If it gets oversold, you can't. Exactly. And this is what I mean by time. This is how you can calculate time in the market. This is how you can be like, the 3 hour is going to take 3 times 9 times 20. Okay, about 27 hours to play out, right? About 9 candles from overbought to oversold. What are we at? 1, 2, 3, 4, 5, 6, 7, 8, 9. We're starting to get there, right? Now you go to the 1 hour. What's that 1 hour looking like? Okay. Yeah, it's kind of pushing up, but it's also Saturday, to be fair. So Saturdays are the worst days to trade. It's the worst. It's usually get this weird sideways bullshit fucking garbage. Oh, it's the worst. Like sometimes it's good on Saturdays to watch the charts, but trading them, you're scalping. That's it. You won't find a position on a Saturday that you hold forever. You'll be lucky if you do. And this, like pullbacks like this, if you see pullbacks and you see no volume, it's not real. It's, once again, go to my video about aggregate trade. I don't think I'm going to go over aggregate trade in this video. I have 2 separate videos on this and explaining how to use it. Highly recommend it. I'll probably make a 3rd video. But if the volume doesn't match the candle, then it's bullshit. Even if if you're going up and it's like, wow, it's going up, but there's no green volume, what do you think is gonna happen? It's gonna go down. It's not a real red candle, right? This isn't a real red candle on Ethereum. It's fake. 30 million in 15 minutes, absolute garbage. They're just liquidating people on the weekend. Anyways, back to what matters, right? So you want to keep breaking it down. Be like, okay, what's the 27 minute? Like, okay, the 27 minute, which is my favorite time frame, just about for like intraday trading, right? You can find like, okay, 27 minute overbought probably goes down. 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 But there's also weird situations, and this is where you break down all the way to the 9 minute, and you keep breaking it down. What is this saying? What is this saying? What's this time frame saying? How can I extrapolate the 9 to the 27 to the 81 to the 3 to the daily, right? To get that idea, the true idea behind the market, the true feel behind the market. Not what people are saying on Twitter. This is the real field. This is reality. Twitter and your friend and what I think and whatever anybody fucking thinks, it doesn't fucking matter. This is the reality. This is the true emotion. We are trying to calculate the emotion of the market. If we can calculate what people are feeling, we can beat the market. The market is beatable. If you theoretically know what everybody is feeling or how people are feeling, you can truly beat them. It's not Twitter sentiment that's fucking 90% bots anyway. It's what the market candles are telling you. Okay? The real sentiment is there. If we look at the weekly, now we zoom out and look at the weekly, and especially for Bitcoin and Ethereum, it's much different. And that's why I think Bitcoin's about to have a bit of a run. But everybody is super bullish when, it's just like, actually, people were more bullish on March 2024 about Ethereum because they actually took it to way overbought RSI. The emotion and the energy in the market, people were way more excited then than they are right now. And we've had a triple top weekly stochastic. And let me tell you, when there's a triple top stochastic RSI, and it has to look pretty much exactly like this, a triple top stochastic RSI is not something that looks like this. This is a bullish wave. This is a triple top stochastic RSI where it stays in the overbought region, and when it cracks down, it cracks down. Example, I think I have one on Bitcoin 3 hour a few days ago at least. That much I do know. Let me see, where the fuck was it? Was it 3 hour or was it the 9 hour? Was it a different coin completely? Triple top stochastic RSIs don't happen that often. And technically a triple top stochastic RSI can become a quadra top stochastic RSI, but only 2% of the time. Once again, watch my other videos on stochastics to get an understanding. But long story short, let's just go back to this. I don't want to waste too much time. I'll try to work on my back of my brain to try to remember what coin it was. Might have been Chainlink, but either way, this just means is that it's been overbought, and it's still bullish, right? This is a bullish, but it means that it has to cool down a little bit. And the fact that last time we weren't triple top overbought and we had a higher RSI than where we are right now here is telling me people are bullish, but they're not as bullish as they were back then, essentially, which is kind of crazy if you think about it. And these weekly stochastics are really good indicators for just spot buying. Don't buy when the weekly is overbought. Buy when it's oversold. Don't buy when the weekly is overbought. Buy when it's oversold. Now, you're not going to get the best you might not get the best price forever, but it's sure as hell better at buying ETH not buying ETH at 4K and way better at buying it at 3K. Did it go lower? Sure, right? But here, once again, what happened at overbought weekly? 4K. Where did we eventually go? Oh, wow, 1.6. The same situation is here. You don't really want to buy when the weeklies are this overbought. When you have your first initial push, you can be like, oh, maybe I'll buy some here because, you also have to take in consideration like what the fuck's been happening for a while, right? There's a bullish divergence. It was oversold here and oversold here. The price of oversold here was 1,100 and the price of oversold here was 1,500. Bullish divergence, right? Okay, oversold here was what? 900. Oversold here, what was it? 1.1K. Bullish divergence. Oversold here, what was it? 1.5K. Bullish divergence. I wonder what's gonna happen. Oh, we went up. What a fucking surprise, right? It's not that hard, guys. The market is easy. You just have to believe in what you believe and you can beat it, okay? So long story short, probably wait until the weekly is oversold, theoretically. I mean, you never really know, to be fair. You gotta keep Also keep in touch with what's the news like, what's happening with the news, is there news, staking, RSI trend here. If we start going below that MA line at 61 RSI, we for sure are going to get more bearish. That'll be a more bearish confirmation. If we get a bounce on this, we could, it's not impossible. We could still see the quadra top. Quadra tops do happen like 2 or 3% of the time. It's not impossible, but I don't think it happens. But if it does happen, I don't know. I'm probably looking at like a 5,500 to 6,000 Ethereum top, and then we go down. It wouldn't be crazy if we went to 6 and back down to 3. It would still be bullish, right? Because why? Because it's still above that 2.8K line. As long as we're above 2.8K, Ethereum likes to perform. If it starts falling below 2.8K, Ethereum does not like to very much well perform. You can kind of look at it just zoomed out like this, right? I think that's going to be it for the intro video. I think we've done enough, 45 minutes. I could go deeper. We might have to do intro part 2 where I introduce Ichi clouds and other shit like that, and the aggregate video and stuff. But I hope this video was a good base case for you to get started. I think it is. I think I've talked enough. I think this should help anybody that's new. If you want, I really do appreciate if you do use my referral code for BEGGINER. If you don't care which exchange you trade on, and personally, remember, a lot of people like MEXC because, and I'm just gonna put that out there, MEXC, it has low fees. You know why it has low fees? Think about it. Their taker fee is 0.01 or 0.02. Their affiliates or influencers usually get anywhere between 50 to 70% of that fee. How do you think they're making money against you? Why is MEXC known for getting, if you're a profitable trader, they block you on the exchange? They block your account. Why is it that MEXC has always the weirdest wicks on candles? Why do their stop losses don't work effectively? I've used MEXC for a while and other exchanges that are low fee because they're low fee because if you make a trade, they're taking the other side of the trade against you. So I'm just letting you know you can use whatever exchange you want, but I'm telling you, if you're using exchanges that have quote unquote low fees, it's because they're playing against you and they're absolutely, without a doubt, rinsing you. Even though you don't think you're being rinsed because you're like, oh wow, I didn't pay much on that fee, because their stop losses never work exactly. Sometimes it's just a little bit above where you went, and that fee, that little fee that you didn't pay, who took that side? The exchange. But anyways, that's it for me. I'm probably going to go do a live stream soon right after this, and make sure to join our live stream, kick.com. We stream every day, just about. I'm doing this fucking full-time, locked the fuck in for the next 6 months at least. So if you're looking for a new home, Naked Nation can be your home. There's so many people that have changed their lives at Naked Nation, and I think you can too. So till next time, Naked Nation, take care. Brush your hair, scrub your scalp. I am out.